it's the last full trading week before Christmas, and as we look at the investment spectrum, we're seeing a mixed trading at Nigeria's fixed income and FX market ahead of this week's bond and primary market auction. On the currency side, International Monetary Fund says Nigeria needs to take a multi-step transition to a more unified exchange rate regime, while at the equities market, the NSE All-Share Index is set to close the year on a positive note, up currently around 27%. I have Nnamdi Nwizu joins me now to give us a sense of what to expect in the financial markets in Nigeria. Thank you so much for your time, Nnamdi. And let's get into what we can expect in this last trading week we're looking at here.
My pleasure. Thanks, Ken. Yeah. So for this week, this is basically the week before Christmas, and when most people will most probably shut down. We don't expect a lot of activity around fixed income markets. We've seen more or less like muted activity in that market since the central bank came out with their special bills circular. We've also have the bond auction, which comes up on Wednesday, and we'll be interested to see how that closes out. But most probably won't see a lot of activity until maybe the last couple of days before the end of the year, where you might have one or two people who might want to rebalance or window dress their portfolios just before the end of the year. But apart from that, I don't expect a lot happening in that market, bonds market, T-bills market. I don't expect a lot of activity there.
All right, now let's get to the IMF's recommendation in Nigeria, talking about the need for a multi-step transition to a more unified exchange rate. I'd like you to speak on what we're seeing from that Article 4 consultation from the IMF.
So it's interesting. Looking at what the IMF has said, they seem to more or less have commended Nigeria on a lot of the government. Two things they seem not to be happy about are, one, management of currency, which we all know has been a huge issue. The fact that you have a spread of about 20% between the parallel market and the official market obviously tells that there's still a big issue there. If you look at the other issue that they raised, was basically talking about taxes and how we can try and raise significantly increase the tax collection issue that we have. Now that has a problem because, as we know, a lot of countries are trying to give tax cuts and tax breaks to try and stimulate the economy and help small businesses. If you look at the finance bill has all sorts of tax breaks and tax waivers for the SMEs under people who have who make less than, I think it's 20 million turnover, about 25 million turnover, get to pay zero tax, and they graduated it up to the larger corporate. So the government is trying to give tax breaks to try and boost the economy, but at the same time, we have the IMF talking about increased taxes. So it's a bit of a catch-22. You need more revenues, but at the same time, you're trying to tax the people less to try and get the businesses that have been hit hard by COVID to basically survive. So which way do we go? The one part you can look at is trying to bring in a lot more people into the tax net, because I still believe that you have a lot of untaxed people within the Nigerian economic space. So how would government be able to widen its tax net? They talk about using technology to try and improve tax collection and also improve tracking businesses and tracking the activities. That might be a step in the right direction, because that might help them get those who are not in the tax net right now to come in within that tax net. On the currency side, we all know that the central bank needs to try as much as possible to go back to the regular status quo, which is have an effective demand-driven two-way put market if you're trying to get the FX market up and running once again.